Hello traders and welcome to another video review. Today is Tuesday, March 26, 2024. Let's find out what's going on the Forex economic calendar today. German JFK consumer climate data scheduled for release at 8 o'clock was already published, and deterioration is a little less than expected, minus 27.4%, not a big deal whatsoever. Spanish GDP 0.6%. We are still waiting for the German 10-year bond auction, which is scheduled for release at 11:30. Bank of Canada Senior Deputy Governor Rogers will give a speech 1:15, and 15 minutes later we got the first major event of today, core durable good orders from the US together with the durable good orders. The market participants expect an increase from minus 0.3% to 0.4%. Wholesale sales from Canada are scheduled for release at 1:30, and the HPI composite data from US are scheduled for release at 2 o'clock. The other major event for today, CB consumer confidence data from the USA are scheduled for release at 3 p.m. At 5:30 there's the Atlanta Fed GDP now, and 30 minutes later we got the 5-year note auction from the US. ECB Lane will give a speech at 8 o'clock p.m. and at 9:30 we got the API crude oil stock changes. So all of the crude oil traders should take a look at this data once released. Now, plenty of data from the US, some data from the Germany, some data from the Canada, so we will definitely take a look at the euro dollar, and we will start with this market. Euro dollar 4-hour chart is showing us a bounce from the demand zone. We bounced towards the 50 periods moving average. Local high was made at 1.0839, and now it looks like the market wants to go a little bit lower, as the bearish engulfing pattern is being made right now on the 4-hour chart. Volatility is not big. The market keeps moving up and down in a very limited range. However, the momentum, as you can see, went from the level of 35 almost to the level of 50, so we need a breakout above the level of 50 in order to continue the up move towards the 100 periods moving average, which is located at 1.08 and 67, and then possibly even towards the short-term trendline resistance. Nevertheless, any breakout below the blue line here, right now it's a technical support, it used to be technical resistance, 1.0835, any breakout below would likely means that we will again test the demand zone located between the levels of 1.0797 and 1.0807, so plenty, so this is like a 10 pips zone. The overall situation here looks very corrective, so we should expect another upside upswings and downswings here. Whipsaw movement is being expected because there is no clear impulsive direction on the euro dollar whatsoever. We got the data from the USA, so let's take a look at the US dollar index 4-hour chart. So what's happened here, we got the very nice V-shaped reversal from the level of 103.13, and this level is apparently a technical support as well. So let me just mark it for you to see that. There you go, this is the technical support level, and it looks like it's a very important technical support level. It worked in the past few times. Now it works as well on the 21st of the March 2024. Since then we have a breakout above the blue trend line, and we went up to make a local high at 104.38. Now we are consolidating around the 50 periods moving average, 104.13. The market doesn't actually want to move any higher for now, as it consolidates the recent gains. We got a little bit like a 40 pip correction. Nevertheless, the next target at 104.95 is still possible for the bulls. Momentum is quite nice, 54 points, strong, positive. So in case of any trend resumption or a breakout from this consolidation zone here, especially above 104.47, we should expect increase in the momentum and another rally to the upside towards the swing high from the this is the March, no, this is for the middle of the February 2024. So the outlook for the US dollar remains bullish. Now, we spoke about the Canadian dollar because of the Canadian data. What is going on the 4-hour chart of the Canadian dollar? As you can see, this is not actually the definition of the uptrend and kind of an impulsive wave. More likely, this market is moving up and down, like in a kind of a whipsaw mode trading, which means that it goes up to the extremely overbought conditions and then back down again to the extremely oversold. So it's a up and down kind of a trading, especially when we hit this level here, 1.36. So the key technical resistance 1.36 planted few times before, 2 times last week. Still no avail, still no impulsive breakout above this level. So this might act really important as an important technical resistance for the bulls. Please notice the fact that we got this rejection here in form of the some kind of a bearish sandwich and the harami pattern, and then we go down towards the 50 periods moving average 1.3573. Momentum is quite positive, quite strong, 56 points as well. Nevertheless, it doesn't actually mean that we will keep rallying here on the US dollar to the Canadian dollar, because the market is having trouble with the technical resistance. So we might see some kind of a further rejection of this level and the resumption of the whipsaw trading mode, which means we go up, we go down, we go up, we go down until the market will give us some sort of the direction here on the US dollar to the Canadian dollar. 1.36, the key level here for the bulls. Please keep an eye on it, because we might see some sort of the action when the price gets there. So US dollar to the Canadian dollar done, US dollar done. What's left basically is the crude oil, because of the crude oil data. So let me just take a look at this. Recently we spoke about the crude oil on a daily time frame chart. We got this very nice measure, 23%. So we all know about it. After 23% of the increase, we got the movement to the downside, some sort of the pullback. This pullback, as you can see, looks pretty impulsive. So it might not be just the first wave of the impulsive decline. It might look more like, let me just find the ABC pattern. There you go. It might look like the wave A to the downside, maybe wave B, and now we just wait for the wave C to the downside, targeting the lows of the $77 roughly around the level of 76, 79. So that might be the situation here. And of course, if we get there, then the ABC correction would be completed in a form of the zigzag pattern. For now, the momentum is positive. It's roughly around the level of 55 points. We made a local high just above the 50 periods moving average at 82.46. So we might see some sort of the deterioration lower when we break, especially back below this level of $80, right? So please keep an eye on the current situation of the crude oil. This movement to the upside doesn't actually look impulsive. It looks more like a part of the ABC correction, looks more like a wave B counter trend, short-term counter trend correction, okay, in subwave. And then of course, when we're done, we might expand to the downside when the wave C, that should be impulsive, would even hit the levels of 76.77. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.